Welcome to the special live stream session with the release of the Consumer Price Index, or the latest inflation data for the month of November 2023, which is set to be released in about 10 minutes at 5:30 a.m. Pacific Standard Time or 8:30 a.m. Eastern Standard Time. And the Federal Reserve has not raised interest rates since July 26, 2023, which maintained the Fed funds rate between 5.25 to 5.5%. And just a year ago, it was between 4.25 and 4.5%. So we've been in this high interest rate economy for quite some time now. This is going to be a short live stream because I have somewhere I need to be, but I'll make sure to leave this video public and not private. And anyway, I'm paying very close attention to this because tomorrow the Federal Reserve is going to make a decision on whether they'll raise interest rates or keep the current rate steady. And I'm going to be live streaming again tomorrow for the Fed's decision and Jerome Powell's press conference for the end of the year. And so be sure to subscribe if you haven't done that already. Let's see here. Press the right button. All right. Yeah, so the private payrolls for the month of November came out last week, and it was far below expectations, which is good news for many investors going forward, suspecting that the Fed will eventually cut interest rates in 2024. But anyway, the private payrolls grew by 103,000 workers in the month of November 2023, which is trending downwards from 106,000 in October and the 128,000 estimated by Dow Jones. And since COVID hit in 2020, leisure and hospitality recorded a loss of 7,000 private jobs just in that 1 month. So we're definitely seeing a slowdown in private sector job creation. Not to mention, the wages show their smallest growth in more than 2 years. But here's what the stock market actually reacted to, and that was the unemployment rate unexpectedly declined from 3.9% to 3.7% for the month of November. And the US economy added 199,000 jobs in November, which was an increase from 150,000 in the previous month. The labor force participation rate also ticked higher to 62.8%, and the average weekly hours worked moved from 34.3 to 34.4. And healthcare in the public sector continues to add more jobs by 77,000 in just 1 month. Government employment also rose by 49,000, and leisure and hospitality rose by 40,000 altogether. So until now, the soft landing was the narrative we've been seeing. So a lot of investors were betting on the Fed to start cutting interest rates in 2024. But now with another booming labor market report, some investors are now upping bets on the Fed's possibly holding interest rates at their current rate just for a little bit longer. And summary of economic projections will also come out tomorrow at the same time when the Feds release their decisions on the to raise or steady their interest rates. And I will make sure to go over that document during tomorrow's live stream. And let me show you what the CME Fed Watch tool is showing right now for tomorrow's interest rate decision. And they are projecting the Fed to maintain the interest rates at 5.25 to 5.5%. And so that's what the market is priced in at currently. And it's funny, there's even like a 1.6% chance of raising another 25 basis points. But if I were a betting man, I would say the Fed will keep the interest rates where they are. And I would be extremely shocked if they decided to cut the interest rates at all. And there would be a significant reaction in the stock market if that happened. And take a look at the projection for March 2024, because this is really interesting. As of right now, the market priced in about 45% chance the Fed will cut interest rates by 25 basis points at the March FOMC meeting, which is down from a 55% chance from last week. And we'll see what happens. And I'm still optimistic that the Fed will cut interest rates starting in 2024, but I don't think it'll start happening until the summertime or about 4 months before election day. Because you can see in the projections in May, personally, I think they're going to start cutting more interest rates in July. As you can see, there's a 15% chance that the Fed will cut interest rates to 4.25 to 4.5% interest rate. So that will be down by 100 basis points. So that's going to be really huge, especially for people who are looking to buy real estate in 2024. Personally, I don't think I'm going to buy any until 2025. But if there's any significant changes going into 2024, that's something I'm going to be paying very close attention to. And take a look at the Cleveland Fed here. The projections, their projections for the CPI today. The CPI projection year over year is 3.04%, which is going to be a significant decrease from the month prior at 3.2%. And there's also a month over month decrease at 0.01%. And the core CPI, which excludes the food and energy index, is projected to decline from 4% to 3.46% and 0.33% month over month increase. And this is quite a significant decrease for the core CPI. And I always try to look at the most conservative projections instead of what the news headline says. And I wouldn't be surprised if the inflation data comes out much lower than expected. And this might signal the Fed tomorrow to possibly start talking about cutting interest rates. And we'll see, right? And when the report comes out, this is the website here for the CPI. I want to pay very close attention to shelters because it's been the largest contributor to the monthly all items increase. And I'm also going to pay attention to motor vehicle insurance because that's one thing that's been frustrating to the American people is how much they have to pay for their homeowners insurance, car insurance, and property insurance. And if you haven't noticed, your car insurance and homeowners insurance have likely gone up by a lot. Mine nearly doubled in the last 2 years. And I also want to take a look at energy, transportation services, and vehicles. And this new report that's coming out in a few minutes might even show signs of deflation. If you're just tuning in, we should get our CPI projection or CPI report or the inflation report in about 4.5 minutes. I do have Bloomberg news ready to go. And let me just go ahead and tune in real quick and while I set this up.
Repriced. A lower one might have more of an impact on the futures markets in terms of what the Fed is going to do.
On a correlated basis, John, I would suggest the markets are already celebrating as a small, but it's tangible lift to the markets. Futures up 9, yields come in nicely.
I think that's the whisper. That is it.
That's the whisper.
There.
I'm looking at it on the Bloomberg.
People, Lisa, this kind of blasé attitude has taken over with inflation with regards to how markets have traded over the last month.
We've seen disinflation, and we've seen more of it than people have expected time and again, and it's international. And we keep talking about that with the ECB and the euro and where it is versus the dollar. But also in the UK, we saw wage growth came in a little bit lower than expected earlier this morning. So people are kind of leaning into that. How big of a surprise to the upside would it take to disrupt this narrative?
It'd have to be a big one, wouldn't it?
It would have to be
It
big.
really would. So this is what it looks like the next couple of days. In just
5
a
seconds.
moment, in about 30 seconds, you're going to get CPI data in America. Then on to tomorrow, a Federal Reserve decision.
Delayed,
after that, retail
right.
sales, and then for many of you, Europa. Before we get there, let's get to the equity market on the S&P 500. The scores look like this on the S&P going into this print. Equity futures positive here by 0.2% on the S&P 500. Just a little bit of a lift in the equity market. In the bond market, bid, massive rally over the last month. Yields lower by 6 basis points on a 10-year to 4.1681. The inflation data just around the corner with a 2-year at 4.66 and down about 4 basis points on the session. With your economic data is might be key.
Yeah, I tell you, it's always the government website.
Well, we come in a little bit higher, John, on the CPI headline, up 0.1%. The forecast was for a flat reading, and that's what we'd had the month before. However, base effects come into play, and so we do see a decline in the year-over-year headline to 3.1% from 3.2%. As far as the core, it is what was forecast, 0.3, a slight tick up from last month's 0.2 gain, and so that leaves us at 4% for the month of for the month of November on a year-over-year basis, again, what was forecast. So some progress as we go forward with these inflation numbers, but that last mile proving slow for the Fed.
Knee-jerk reaction, in line as a beat, nothing to change the story. Equities march on, up 0.25% on the S&P 500. In the bond market, the rally continues. Yields lower on a 10-year by 7 basis points, 416 on a 2-year, down 5. Session lows at about 465 on a 2-year. In the FX market, just a touch more dollar weakness in there against G10 and against the euro. The euro just off session highs of 108.15, largely in line, away from the headline figure, Bramo. And the takeaway for so many is, okay, carry on.
This to me is markets looking for a reason to keep on partying. Basically, the Fed pivot party that we were hearing about.
Yeah, let me go ahead and mute this real quick, and I'm going to read the report that just came out. It looks they all came out pretty much expected, with the exception of the headline CPI is 3.1% instead of 3.0% that was projected. So the increase was 0.1% for the month of November. I'm going to go ahead and paraphrase here so you guys don't hear the entire paragraph word by word. The index for shelter continued to rise in November, which is not surprising. And it is offsetting a decline in the gasoline index. And the energy index fell 2.3%. So you know what? As a matter of fact, I'm just going to go ahead and share the screen with you here so that you guys can see it together. Let's see. That's it. All right, there we go. If you need to zoom in on the text, you can always pinch on your mobile app. That's something that the YouTube just came out, which is really cool. If you can't see the text, just go ahead and pinch it, and you can zoom in on the text. So the shelter had a significant increase, or not significant, but it did increase. And the food index actually increased by 0.2%. That's actually significant too, just by month over month. The index for food at home increased 0.1%. Food away from home rose 0.4%. Let's see. So the core CPI is, it was expected at 4.0%. And let's see, after rising 0.2%. Okay, so let's go through this right here. If you've never read this report before, you always want to look at like the month over month, and then you can see the changes going into November, October, September. So today is December, right? So the report came out today was from the month of November. And here on the far right is the year over year changes. So that's how you would read it. Food 0.1, 0.2, 0.1. And then the energy, it's down -2.3 as expected. And then the energy commodity is down 0.58. Gasoline, significant, -6%. Fuel oil at -2.7%. The government always pays attention to this, gasoline, because that's what people pay attention to. The voters do anyway. Electricity is up. Utility is going up as well. As we go into the winter months, people will use more energy, especially gas. Okay, so don't be surprised if that ticks up going into January and February. Let's see here. What went down? So new vehicles went down -0.1%. Used vehicles went up. Holy cow, 1.6% in just 1 month. That's significant when it comes to just the used vehicles there. Apparel, clothes down -1.3. Medical care commodities up 0.5. Let's see here. Shelter just keeps going up 0.4. And then transportation services 1.1. Wow, that is a significant increase for transportation services, and then the medical care services. Okay, so I don't have a whole lot of time left, so I'm going to go and search some things real quick. But food is up, energy significantly down, and not seasonally adjusted basis. So this is the summary. When you click on the HTML here, that is the summary that you're going to get right there. Okay. But what you want to really click on is the PDF, and the PDF shows you more in depth of the charts, fancy charts, and all that stuff. And it does take a while for, average people like us, not on Wall Street, to kind of like take a look at the indices and how to read them. What I like to do personally is kind of starting from the bottom. One thing I do want to look for is the airline, because airline is something that is very interesting on how fast that is a deflationary indication with the airline. So let's see here. Where's the search? Okay. Okay, so decline, airline decline, new vehicles decline. There we go. Airfare. So airfare is down negative 12.1% year over year, and it is down another 0.5% month over month. So that is something that's really interesting, and you can kind of tell too that the demand has slowed over this year. Is that people are not traveling as much. People travel a lot during the summer months, but they're still not traveling as much. And one of the main reasons is the student loan repayments. Okay. So when that happens, people are kind of tighter on the cash flow. And you can read that a lot of people are kind of choosing to stay home for the holidays, this holidays. So, that's one indication. And let's see, motor vehicle insurance. This is this one right here. All right, let me see if I can erase that. There we go. So do you see on the second from the bottom, motor vehicle insurance? It is up 19.2% year over year. That is insane. And you can probably tell me in the comments that how it's been increasing so much over the year. Even if you don't get into a car accident, you have no bad records at all. That thing has been increasing month over month, and it's frustrating many people. Is insurance, homeowners insurance, and the car insurance. Let's see, shelter is up 6.9%, which is something that the Federal Reserve is paying attention to because it is the largest contributor to the CPI. So if that the home prices don't come down, or people are still buying houses, that's still going to be a indicator of how the economy is not slowing down as much as what the Fed is expecting. Okay. So yeah, we know about the energy and all that stuff. Let me go and scroll up here and let's make sure. Okay. Airline fares, got that. Okay, so it was 0.7% increase. That is insane. If you look at airline airfares here, it is a 0.7. If you look at the far right side, I can't really highlight it on the PDF or the on Google Chrome, so just bear with me here. And let's see, motor vehicle insurance increased by 1.1%. Oh man, they got to do something about that. So I actually did a video on why the insurance, your insurance is going up. There's been an increase of car accidents since the pandemic ended. People just forgot to drive. I don't know, but there have been more accidents since 2020, and the insurance companies they're bleeding money. They're actually losing profit to these accidents. So they have, they're justifying that they have to raise prices, otherwise they're going to go broke. So, and they have to pay more money to fix those cars, or let's say, they have to replace a vehicle that's completely totaled. But that vehicle has appreciated, the vehicle they have to replace with is much more expensive than it was from 2020 or 2021, right? So now the insurance companies are paying more money to replace your vehicle. So they're like, holy cow, now we're going to raise these insurance rates up. So, that's one thing. Health insurance went down. It's still going down. I think it's somewhat steady. I did look at the health insurance rates going into next year, comparing to several companies like Blue Cross, Blue Shield, United Healthcare, and several other ones. And I'm like, all right, so the rates are barely increasing next year, which is a good sign for many people. let's see. There was one significant decrease on that. I do want to check out. Let's see. Negative 2.9. Domestic services. Okay, so that's one thing. Domestic services, moving, storage. It's flat. People are not really moving. As of right now, let's see here. And if you're just tuning in and if you don't know how to read this, just go into, just type in the Google search inflation report and then just click on the PDF one, and it's going to give you how to give you access to this. It's completely public. And when you read through this data, okay, so as you can see on the right side, do you see right here where it says November 2022 to November 2023? That would be the year-to-year changes, right? And then over here on the right side, then you're going to see the October to November 2023. That's the month-over-month changes. So I'm going to give you an example. So let's say the first line here, sports vehicles, including bicycles. It is down negative 0.9% month over month, and it is a decrease of negative 1.9% year over year. So I hope that makes sense. That's how you kind of like have an idea. And the reason why I go through this, one, we kind of want to have a good prediction on what the Federal Reserve might do tomorrow, if they're going to raise interest rates or keep the interest rates flat. Personally, I don't think they're going to raise interest rates. A lot of the governors from the Federal Reserve already said that they are comfortable where they are with the current rates, 5.25 to 5.5%. And if they raise another 25 basis points, is it going to make a huge difference? Probably not, right? They're already seeing a slowdown on the inflation rate going forward in 2024. And if you're just tuning in, my prediction is that they're going to cut interest rates in July, cut interest rates by probably 100 basis points, if not more, going down to 4.25, possibly even down to 4%. One of the main reasons I predict that they're cutting interest rates around there significantly is because of the election day. It is election year next year, and everybody's voting in November. They want to see some, good returns from the stock market. They want to see rates come down so that people can afford a home, right? So, buying a house at 8% interest rate right now is just, it's almost unaffordable. I wouldn't say almost, but it's pretty much unaffordable right now. That's one reason why I haven't been looking at any houses this year. They're so freaking expensive. Let's see, appliances. Okay. Laundry equipment went down by negative 3.8%. Okay. So a lot of the household items, because people are not purchasing houses right now, people are not buying houses, people are not selling houses as fast as they want to. But if you take a look at all the housing furniture, housing items, those things are coming down more faster than many other line items that you're going to see here. So like bedroom furniture is down, linens are down, floor coverings are down, appliances, right? So appliances are down negative 10%. So it's something to pay attention to. And yeah, I always start from the bottom to read this because it's so much easier for some reason. But yeah, just give it a few times to read it, so that you get better by just going over it over and over. Snacks are down. That's good. Spices are down a lot. Condiments are down. Energy commodities are down. Gasoline is down. So if you missed the first part of the live stream, when gasoline prices, they are the most influential prices when it comes to how voters make their decisions when they go to the ballot box. So, what was their impression on this administration with their gas prices, right? Jimmy Carter, he lost in 1980 because of, it wasn't just the Iranian Revolution and the hostage crisis, but he lost control of the economy back in the late 70s. And so that's something that you do want to keep an eye on. And that's all they're going to talk about during the election next year is economy, economy, inflation, inflation. Okay. So let's see. I only have like 1 minute left, so I'm going to go ahead and quickly go through this, see if any significant changes. Poultry's down, chicken's down. That's good. Beef is down. That's good. Negative 1.3. Wow, beef is down significantly. Negative 1.3% in just 1 month. Steaks down negative 2.5. If you're vegan, I'm sorry. I didn't mean to offend you. Yeah, airline fares. That is really good news if you're looking to travel, but airline fares still down negative 12.1%. Airline fares did go up like 0.7% month over month. So that is going to be a little increase there. Okay. All right. So that's pretty much it. They met all expectations. It came in headline CPI 3.1%, core CPI at 4%, and the market right now, I wouldn't be surprised if 10-year Treasury yield really matters. You're gonna see the ticker and the stock market chart just moves based on what he says. So pay attention to that. And I'm gonna be live streaming again tomorrow around 10:30 a.m. Pacific time and 1:30 p.m. Eastern Standard Time, and I'm gonna talk about some of the interesting investing formulas, if you haven't seen that already, investment formulas, as well as the Fed's decision, summary of economic projections, and the Jerome Powell's press conference. So that's going to be pretty juicy tomorrow. But anyway, appreciate you guys tuning in, and hopefully you guys got what you wanted. And if you got value out of this video, let me know. And until then, see you tomorrow.